What's good, bro? Tato chips, bro, potatoes, bro, chatas. Bro, I seen that shit on TikTok. That shit had me so fucking weak when I seen that shit. Bro, Tato chip. I was literally rolling for like a day and a half straight. Anyways, bro, Tato chips. It's a review day. Our strategy will be tomorrow. All right, we're gonna be learning about PDI tomorrow. There's gonna be 2 videos on that. Then we'll have our continuation model. There will possibly be 2 videos on that. That one's pretty easy. And then there will be our mech model, our mechanical model that we will go over as well. That will be 2 to 3 videos as well. So strategies coming up tomorrow. I wanted to do one last review day before we got into the strategy, and this review day is going to be fairly quick, fairly easy, right? We're going to be reviewing AMD, open, low, high close, open, high, low close. Okay, our draw on liquidity, and then conditions. So there's going to be about 5 things that we are going to go over. However, AMD, the Ohlc, and Olhc are all roughly the same shit. So how does price move, right? Let's start off with AMD. How does price move? Well, price accumulates, and then price moves like this on every single time frame, right? So price accumulates. Okay, we're accumulating, and then this would be an example of a bearish, right? Because we manipulate higher, most likely into like a fair value gap or something, right? Maybe there was like a fair value gap over here that we went into. And then what do we end up doing after accumulating, manipulating into a bearish fair value gap? Well, we ended up distributing out of it, okay? So that's what AMD would look like as a bearish example. Here's our bullish example. Exact same thing, just going the other way. So what do we have here? We have a clear accumulation zone. And then what do we get? Well, we get a manipulation lower. What did we manipulate into? Possibly a 15-minute gap, hourly gap, 4-hour gap, right? Doesn't matter. Some sort of bullish PD array we manipulate into. And then what do we get out of it? Well, we get a bull run to the fucking upside, Long John Drake to the upside, right? So this is classic AMD. Here we have our accumulation. We manipulate into a gap, manipulate past liquidity, manipulate and create an SMT, right? We're manipulating, creating something in our bias, right, to help our bias, and then we are distributing. Same thing here, right? We're accumulating, we manipulate lower. Let's call it a fair value gap, and maybe we also got an SMT, right? So here, maybe it looks like this, right? We also got an SMT. Not only do we have a bullish SMT with a bullish fair value gap, but we also have a clear accumulation manipulation zone. So now what are we waiting on? We're waiting on our distribution. Okay, so that is AMD, very simplified. It's all you really need to know about AMD. You can literally just zoom out on any single time frame and price will look like that. So with that being said, let's jump into, oh my god, where's that shit at? Oh, I found it. I found it. All right, let's jump into open, low, high close real quick. And we already made a video on this, but right, let's jump into it. And we're gonna make this a really quick. So open, low, high close, bearish example. What does price do? Price opens, right? We have our opening price. What do? We manipulate higher, putting in the high to the candle. Come all the way down as we're distributing. We put in the low to the candle, and then we retrace just a little bit, making the closing price, right? So we opened high, low, close, right? Open low, or open high, and then close low. Same thing over here, just opposite, right? Same but different. Opening price, what do? We open low, putting in the bottom of the, putting in the low to the wick, the low to the candle, right? Our manipulation. So we opened low. What do we end up doing? We end up distributing higher, putting in the high to the wick, and then coming down just a little bit and putting in our closing price. So what do? We open low, high, close, okay? Price opens, manipulates higher for our bearish example, distributes lower than closes. And then for our bullish example, price opens, manipulates lower, distributes higher, and then closes, okay? So bullish, bearish examples on that. Here is an example of what our 4-hour time frame would look like, right? So if these candles represent our 4-hour candles over here, this is what price would look like on the lower time frames, right? So price opens, let's say 10 a.m. opens right here, right? Let's call 10 a.m. opens at this line, and then 10 a.m. opens right here at this line. Okay, so what do we know about how price moves? Well, around 9:45 to 9:47-ish, all the way up until about 10 o'clock, 10:05, price starts to accumulate and chop around. So what do we have here? Price is chopping around. Market opens at 10 o'clock. A minute, 2 minutes later, what do? Well, we manipulate higher. Let's call it into a fair value gap. So we opened high, putting in the high to the wick, and now what are we looking for? Say we opened high into a fair value gap, we also manipulated into. Well, then we're looking for a distribution lower, and then a little retracement back up for a close, right? So that's how price moves on every single candle, even like the 1 minute candle. Let's say this is the 1 minute candle. Well, this is what the seconds chart would look like, exactly like this. So you can use this on every single time frame as well. And then same thing over here with our bullish example. Say this is the 4-hour candle again, right? 10 a.m. opens right here at this gray line. Well, what do we have? We have an accumulation zone. What are we waiting for, especially if we're already bullish? Well, we're waiting for a manipulation lower. Let's call it into like, let's say we already have our high time frame narrative. Let's say this is a 5-minute gap that we manipulate into, right? Manipulate into it, see an inversion out of it, distribution higher, boom, right? That's also called trading with time, right? Because if price is accumulating and manipulates lower and then distributes higher, why would we want to take a short with this, right? Because then we would going against the trend of the 4-hour candles. So we wouldn't be trading with time in that scenario. Okay, so I hope that makes sense. We always want to essentially trade with time, unless if we're taking a mech, and we'll get into that, but then we will still have discretion to take a short in a long market. We'll get into the mech model in a couple of videos, okay? So don't worry about that. But back to like these examples, like why would you long in this market and why would you short in this market, right? If anything, let's take a continuation, wait for price to retrace into a gap and then see an inversion out of it. And if we do get an inversion out of it, let's say like right here, then boom, then we can enter long, right? There's no reason to be shorting this. Because how does price move? Well, price moves exactly like this. It moves in stair steps. To go higher, it has to come down a little bit, right? So we can do something like this, and that would be what our trade would look like. Oh, okay. Let me get rid of these lines in the middle of my screen. Let's just jump on over to what the 945 essentially what would look like, right? So back to what I was just saying up here, trading with time. 945 price action, what do we know about that? Well, it starts to chop around a little bit, okay? Again, chop around. Literally exact same example, except I just have 945 drawn out, right? So 945 chops around, we're accumulating, and we're already bearish on the day, and there's an unfilled bearish gap above us. What do we want to see? Well, we want to see manipulation higher, and then an inversion and distribute lower and enter off that. So that would, again, be an example of trading with time going short, right? That would be a bearish example of trading with time. And then here's our bully example, right? I don't know why I did that. Wow. Our bully example would be, right, we're accumulating right before 10 a.m. opens. What happens at 10 a.m.? Well, we manipulate lower, opened low, because this is the 10 a.m. is a new candle for an hourly candle and a 4-hour candle, okay? So this is why open low high close and open high low close, I use it a lot at the 10 a.m. because it's 2 new candles to the higher time frame. So what do? We manipulate lower into a bullish gap, okay? Putting in the low to that wick. Not only did we open low and we're trading with time, we also confirmed our narrative by tapping into this gap right here, okay? And then how do we confirm our narrative? This inversion, enter off the inversion, targeting any buy side up here, which is going to be any of our key levels, which is going to take me to our next topic, which is going to be key levels. So what are our high time frame key levels, right? High time frame key levels. What are they? Well, they're going to be 1 hour, 4-hour, daily highs and lows, okay? What else are our key levels? Session highs and lows, which is going to be Asia and London. That's all we're really worried about, okay? That's also another high time frame key level. And then what else? So here's our 3 forms of our higher time frame key levels: our hourly, our 4-hour, and our daily highs and lows in this general area of price. All right, we have our session highs and lows. I don't know what K is. We have our session highs and lows. So what are we looking for every morning between market opens? Well, where is price right now, and what happened previous to price coming, right? Did we already sweep out highs? Did we already sweep out lows? Are there lows below us and we're in a bullish trend? So if we're bullish, do we want to see those lows get swept out first, right? Session highs and lows, that's what we're worried about for our key levels. And then any unfilled 1-hour or 4-hour gaps, right? So say here, for example, let me just draw it out real quick. Or let me give you a bullish example. Here is London lows, right? And right beneath London lows, we have an unfilled, let's call it 1 hour fair value gap. Okay. U1H, FVG, unfilled 1 hour fair value gap. Oh my God, there's a hair on my, okay. And price is bullish overall, right? These are London lows right here. Price is bullish overall. And price is right here when market opens. If I'm bullish, what do I want to see happen? I want to see price come down, take out these lows, and also fill this gap. So then we can take an inversion out of it. Okay. Make this a different color. So then we can take an inversion out of it. Stops at the lows. Take profit to this high right here. This high right here. And this high right here. That can be take profit 1, 2, and 3. Okay, does that make sense? So regarding our take profit and stop losses, where do we normally put it? Well, our stop loss is either at swing lows, or say we have an SMT right here, right? It would be at SMT lows, lows or highs inside of fair value gaps, right? This goes both ways. I'm just saying lows because this is a bullish example, right? So our stops are going to be at lows, take profit at highs. But if we're going the other way, it would just be the complete opposite, right? So stops at swing lows or highs, stops at SMT lows or highs. We can put them at, let's say if you don't want it at this low, then you can put it at the bottom of this fair value gap, just in case price does want to come down one more time and sweeping this out. But if we have a whole bunch of confirmation, it most likely won't happen, right? So in this general scenario, I would put it at these lows right here because these lows should be protected due to it being inside of a fair value gap, and then we got an inversion out of it, right? So in this scenario, we're disrespecting fucking bearish PT arrays, and we're respecting bullish PT arrays, along with just filling all these London orders down here. So that's why I would put my stops at that. And then where is our take profits going to be? Unfilled fair value gaps, right? Relatively equal highs or lows, which is right here, relatively equal highs or lows. Session highs or lows, let's say up here actually is Asia. Let's say these are Asian highs. Okay. We can use Asian highs, so session highs, literally any of our key levels, right? That's where we're going to set our take profits. And we want to set our stop losses as well at protected highs or lows, which are going to be inside for value gaps. SMT highs or lows, which should also be protected if we get an inversion, right? Because if price, say we get an SMT, we get an inversion right here. Well, if price ends up coming down and doing this, especially if this is inside of a fair value gap, and then just ends up chopping around, well, either it's just bad price action or we have just the wrong draw on liquidity. However, this is still an A+ setup. Why? SMT with London lows, we swept it out. High time frame narrative, fair value gap, we're already in a bullish trend. We see an accumulation zone right here. What do? Oh my God. And this happens almost every day. What do? We manipulate lower into this gap. And then what are we expecting? We're expecting a fucking bull run to the upside, you heard? Okay, we're expecting all this to have a fucking bull runnage. Do you understand? It's pretty simple once you start breaking it down. So what have we covered so far? We covered AMD, right? Accumulation, manipulation, distribution. We have covered our key levels, right? What are our key levels? High time frame, highs and lows, 1 hour, 4 hour daily. Session highs and lows, Asia, London, okay? And then any unfilled high time frame for value gaps. 1 hour, 4 hour daily for value gaps in the general area of price. So this hourly for value gap was unfilled. It was also right beneath London lows. So if I wanted to see it price go higher, I would like to see a sweep of London lows and come into this fair value gap. Okay, so moving on to finding my essentially daily bias or draw on liquidity for the day. Before moving on to conditions, let's do this real quick. So finding my daily bias, right? So obviously I have a general bias of where price wants to go. Like, what trend are we in right now? We're clearly in a downtrend. What are we doing? Well, we retraced up into about equilibrium area. Let's take out our fib. What do we retrace into? Almost the 0.79 range, right? Which is exactly where the 4 hour for value gap is. And I just drew this out too. I didn't even know. So how does price move? Well, we know, again, price moves in stair steps, right? So if we have a complete down leg right here, which is going to be this, and we're retracing up, cool. But we have draws on both sides, right? So our job as day traders, as, I wouldn't say swing traders, but as, what, there's a fucking word for it. Oh my God, I just blanked out. I probably sound like I don't even know what the fuck I'm talking about. But there's a word for us day traders that are only in positions for short periods of time, right? Scalpers. That's the word. Fucking scalpers. I don't know why I sound hella retarded about doing that. But we're essentially just scalping the market, right? So we're only looking for about, well, I'm only looking for about anywhere from like 20 to like 50 points in the market to catch. I don't want to hold my trades overnight. So like, obviously, yeah, we're in a downtrend. So I'd probably just wait for like either these Asian highs or this 4 hour to get hit. And then I would take some sort of inversion down and then just hold my trade overnight. That would be a swing trade. Well, since I'm a fucking scalper, I'm not looking for big moves. So I don't care if the market goes up and down and like overnight or whatnot. I just care about it what happens anywhere from 9:30 in the morning to about 11 when I get off, right? So if price is like this, what do we see? We see a clear accumulation zone, okay? What do we have overall? Our overall bias is a downtrend, right? Let's say this is the 4 hour. Our overall bias is the downtrend. But when we scale down, what do we have? Well, we have London lows, Asian lows, an unfilled fair value gap below us. And then we also have Asian highs above us and an unfilled 4 hour gap above us. So here, let's move this gap down a little bit. So let's put it like right here, right? So we can, in my thought process, yes, I'm bearish overall. So if we do manipulate higher first, that would be great, right? It would be confirming my bias. I'd have more conviction. But if we're accumulating and we come down lower first, let's say we tap into this unfilled hourly while sweeping past London, but when we swept past Asian, we also have an Asian SMT, right? Let's say we have an Asian SMT. This is just an example, but this is like shit I use on a daily basis, right? So we have a clear accumulation zone. So I don't care if price manipulates higher first into this 4 hour gap and sweeping past Asian highs, then I can assume, okay, we're probably going to continue this downtrend lower on the higher time frame. So then I would be looking for shorts. But since, like I said, we're a scalper in the fucking market, I'm only looking for small moves. So what is price giving us? Well, we just filled London orders. We just filled Asian orders. When we filled Asian orders, we now have a bullish SMT. Okay, we have LRL above us, all these relatively equal highs. We have Asian highs above us. We have an unfilled 4 hour gap above us. So we have high time frame draws on liquidity that price is most likely going to want to draw to. Okay, so I'm saying you have to know what your draws on liquidity are in order to trade like this, right? Because yes, I'm going against the overall trend, but I know where price is most likely going to want to draw to next. Obviously, I don't have a 100% win rate. No one does when trading, but this works 70 to 75% of the time, and I have about a 72 win percentage, okay? And I'm still not even the best trader. I learn every single day. So just listen, right? We fill these London orders. We fill these Asian orders. When we fill the Asian orders, we create a bullish SMT. What else do we get? Well, we also have an unfilled hourly below us. Okay, cool. We have an unfilled hourly below us. How can we confirm that price wants to go back up? Let's say we invert a 3-minute gap right here. So not only did we accumulate and manipulate, okay, again, trading with time, we accumulated, manipulated at 10 a.m. Let's say 10 a.m. opens like right here. So not only do we have an open low into a bullish gap, we also have an SMT, okay, and we have clear draws of liquidity above us, right? We have all these resting orders right here, which is LRL. We have these Asian highs, and we have this unfilled 4 hour gap. So if we see an inversion, well, we can assume, okay, price is most likely going to want to take out at least this LRL, right? So we can anticipate a distribution higher. This is how I like to tie everything together. And again, this is just a review day, so most of you guys should know this. If it's still unclear after this video, please DM me. Maybe you have some custom questions that I can answer for you that don't quite make sense. But let's say we do inverse this gap. We're anticipating a bull run. Where's our stops going to go? At the SMT lows inside the gap. Where's our take profit going to go? Either if you want this right here, if you want these relatively equal highs, if you want Asian highs, if you want this 4 hour gap, I would do it right there. But if you are going to hold it all the way to the gap, I would definitely go at least break even at one of these highs or take partials at one of these relatively equal highs right here. Okay, so that's literally all I'm looking for on a day-to-day basis. See how I had a overall trend in my favor, or not in my favor, but like overall, like I was bearish overall, right? Clearly, we are bearish, right? We're coming down, we retrace back up almost in the 79% extension, and they're most likely going to want to continue down. But since we're scalpers, we're only looking for small moves on the market where price wants to draw to before making those big moves, okay? So if we get conviction, which we got here for value gap, SMT, sweep of previous session lows, inversion, clear draws above us, boom, I'm in. Okay, that's all I need. So just because we are bullish on the higher time frames doesn't mean I'm necessarily only looking for shorts. That's why I don't like it calling it daily bias, because people like to get married to their daily bias very easily, and I was one of those people, so I understand. So this is why I like calling it finding your draw on liquidity. Where does price want to go from 9:30 to 11? That's really all I'm looking for. So with that being said, let's roll on over into conditions. Wow, I was on mute. Anyways, let's go into conditions real quick to end off this review, and then tomorrow we are going to get in our strategy, right? So conditions. I use conditions every single day. If you guys haven't watched the full conditions video, go watch that, because this is just going to be a brief rundown of it, right? I use them every single day, and it's boosted my win percentage, and it's also helped me a lot mentally as well, because it separates essentially the shitty setups to the A+ setups, right? Gives us better narrative as well. So not only does it help us find better setups, but it also actually helps my mental as well, because before I use conditions, I would just enter blindly and then get stopped out and not know why I got stopped out. So using conditions can help me not enter those dumbass positions I would previously do before, right? So what is a condition? Well, let's explain it to us. So what do we got? What do we got all the way over here on the left? We have a clear uptrend, but we just tapped into a high time frame bearish PT ray. So now I'm going to assume, okay, since we're in this bearish PT ray, if I'm taking shorts, what do I want to see? So we're just making assumptions now. So this part one is going to be assumptions, okay? You're assuming what is going to happen next, right? Making A+ scenarios in your head. High time frame bearish PT ray got tapped, but we left a 5-minute bullish right below us. So with that being said, if I want to take shorts, what do I want to see with this 5-minute bullish? Well, I want to see this 5-minute bullish gap get absolutely ran through, right? I want us to see us disrespect bearish PT rays. So as soon as I hit this and see this, I can be like, all right, let's possibly look for an inversion of it, and then maybe a gap opens up. Well, what do we get? We got an inversion of the 5-minute bullish gap. Remember, we want to short. And what else do we end up getting? Well, now we have a bearish gap that opens up. Okay, so what was our first condition? Our first condition was this 5-minute bullish gap, right? Because if it got respected and ended up doing something like this, well then maybe we just continue higher, and then maybe we just have the wrong draw on liquidity for the day, right? So this is why we set conditions. Now, if we run right through our condition, okay, cool. We've ran through one condition, but is that enough for us to enter shorts yet? No, because maybe there's something else down here. Maybe ES is just retracing into a fair value gap or something, and then we want to continue higher. So how are we going to confirm or further confirm our entry, which is going to be our execution? Create condition number 2. What is condition number 2? Condition number 2 is going to be this 5-minute bearish gap that opened up right after we inverted this 5-minute bullish gap. Okay, so condition 1, here, let me just mark it in blue. Condition 1, just over color coordinated. Condition 2, what does price do? Price pushes into condition 2, which is going to be our bearish gap. So now only do we have a higher time frame tap into a bearish PT ray, we also disrespect a middle time frame, right? 5 or 15 minute bullish PT ray, and we also just tapped into a 5/15 minute bearish PT ray, as well as disrespecting the 5/15 minute bullish. Okay, so now we have our assumption, right? We're assuming okay, if price is going to go lower, this is what I want to see. One of the things happened. Well, it wasn't enough conviction, so what do? I created another condition, which is going to be this bearish fair value gap, condition 2. And then what else are we waiting on now that we have a higher time frame and 2 middle time frame PT rays in our direction? Well, we're just waiting on a execution point, which is going to be what? How do I enter? And how do you guys enter if you guys have me as your mentor? Well, we enter off inversions. What do we have here? We have a 3-minute IFVG. What are we doing? We're shorting from there. Stops inside of, or stops at the highs. And what are we targeting down here? Well, maybe there's London lows, right? Maybe there's Asian lows, right? Maybe there's an unfilled fair value gap right here that we can target. Okay. unfilled 1 hour fair value gap. Boom. So not only do we have clear draws below us, but we're also disrespecting bullish PD arrays. We're also have a high time frame narrative with our bearish PD array right here. Not only did we tap into a middle time frame bearish PD array as well, but we also disrespected bullish PD arrays on the lowest time frame as well, right? That's all conditions are, fellas, right? We're creating assumptions that then turn into confirmations, right? Set conditions, wait for those conditions to get hit and do what we want to see, right? That's going to be our confirmation. And then from there, all we're waiting on essentially is just execution points, which is going to be our 1 through 5 minute inversion fair value gaps, right? So if in the same leg up, say this leg up right here, we had a 2 minute and a 3 minute. I'm not worried about the 2 minute because the 3 minute holds higher power. Why? Because high time frame holds higher power. Okay. Get the inversion. What are we then targeting? Our key levels that we just talked about. Session lows, high time frame, unfilled fair value gaps, right? Maybe this is also an hourly low right here. Okay. It's that simple, guys. So with that being said, that'll wrap it up for today's video. I appreciate it if you guys did watch the entire video, had pretty good knowledge into it, and it, like I said, it went by pretty quick, especially for a review day. So with that being said, tomorrow we are going to jump into our strategy. Our strategy is finally fucking here. I know you guys been waiting on it. Go follow me on social media at LoeGpa on everything. Bada bing, bada boom, potato chips. All right. So with that being said, I'm out for today. Sorry for the late upload. It's probably going to be around like maybe 2 o'clock, 2:15ish. I haven't been home. But that being said, I'm out. You guys have a great rest of your day. I will catch y'all boys tomorrow at 9:20 with a daily bias.